Will we see a housing boom? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. Let's look at this Yahoo Finance article written by Stephen Koukoulas asking if we will see a housing boom. What do you reckon? I'll have a shot of coffee. Let me know in the comments if you think Stephen is predicting a housing boom or it's all gonna be right, mate. She'll be fine. Or a bust. Let us know. Okay. Hosing down. The house price hype. Will we see a boom? Or is this a dead cat bounce? Every man, woman, and their pet dog are upbeat about house prices. Or so it seems. Get set for a house price boom is a common refrain from those wanting to grab a headline. Indeed, 2021 is kicking off with some strength in the housing market, and it is reaching the point where economists are trying to outdo each other to see who can come up with the most upbeat price increase in 2021 and 2022. And you see, we've just had our first recession in 28 years, everyone. This is because there is massive government intervention in the economy. That's why this is happening. They won't allow it to correct. And a viewer made the comment the other day. Used to be one person could support a home. The husband would go work, earn the money, and your wife could stay at home, raise a family. Now, it's the husband and wife. Both have to work just to make ends meet, to get into a house. Can't even spend time with your children anymore. They're raised by the state. You put them in childcare. It's kind of sad, really, if you think about it. But it's actually gotten worse than that. Now, with all of the government stimulus and the support that, well, it's not like the government had a big pile of money. The government has a big army of tax cattle. That's us. And it's our children who will be required to pay for it. So now it's not only mum and dad working, but it's also a legacy and a burden placed on the future generation of kids to keep the housing bubble going. What do you think? So, 6% gains. How about 8? What about 16% over the next 2 years? 16%. How are we the lucky country? We're not anymore. We're not the innovation nation. We're not the lucky country. Our economic complexity is very low for advanced countries. We just export natural resources and farm products. We don't manufacture anything advanced here. We only had 2 places where we could make masks in this country. I was talking to a neighbor who worked for the military. They had to get the other machine up and running because it was being used for spares to maintain the existing mask manufacturing machine. People have to go into debt for a huge portion of their life just to get a spec house. They have to work, both of them, in a couple. People put off having children. The life and quality of life that previous generations had doesn't seem to be attainable anymore, does it? Maybe we need to question if all this intervention and protectionism of the government, protecting the housing market, stimulating the economy, if the price is worth it in the long run. Maybe it would be better to have some tough corrections and some short-term pain for better long-term quality of life. If we had a market correction, sure, a lot of people would lose their jobs, but there'd be a lot of readjustments in the economy. That's what you need, sadly. You need some creative destruction in the market. If there's no feedback, people just keep making the same mistakes over and over again. So to be sure, housing has found support in the last few months following the slump evident around the middle of 2020 when prices fell in most cities as the pandemic recession hit. That context is very important when it comes to what might be termed a mini boom in the wake of the general opening up of state borders, lower interest rates, easier credit, and some pent-up demand, especially from first home buyers, and super withdrawals, and a job seeker increase, and a economy, that was shut to the point where it encouraged significantly higher levels of savings than before. And people that are suffering from FOMO, from ever getting in the market. Because our entire culture in this country now is just, you got sports and then you got housing. What's first, sports or housing? There's the question. All these bloody reality TV shows on telly all the time. Housing this, kitchen flippers. I don't know. I can't watch them. I don't watch television. And I can't watch that because that's just like work. Anyway, house prices are still weaker today than a year ago. But how are wages going compared to a year ago? Based on the excellent, CoreLogic database, in the last 3 months, prices are up around 2.5% in Sydney and Melbourne, 3 to 3.5% in Brisbane, Hobart, Canberra and Adelaide, nearly 4.5% in Perth and over 6.5% in Darwin. Prices in regional Australia are up 4.5%. These look to be solid rises. But note the following background from a blend of CoreLogic and ABS data before getting too excited about house price boom. So prices today are lower than in June 2017. Prices today are lower than in December 2017 in Melbourne. Brisbane, in the 3 years since the end of 2017, house prices are up a total of 7% for an average annual increase of 2.25%. Adelaide, since the end of 2018, prices are up around 6.5%. So Adelaide is doing well over this short time frame. Perth prices today are substantially lower than in 13 and 14. Darwin, prices are hugely below 2012 and 2014 levels, even though it has been the strongest capital city for house price growth over recent months. Canberra and Hobart, prices continue to grind higher to be among the best performing housing markets in recent years. Two states with very high proportions of civil servant employment. Now, if we have a look here, we can see the property price growth. So we're talking, 14 there for Darwin. We're below that level. You can see it on the chart there. Look at that drop, among others. So, why the need for caution about the boom? The mini boom right now follows a period of weakness, the normal ups and downs of the housing price cycle. The current upswing is being driven by easier credit, low interest rates, and confidence that the recession is over as COVID-19 is successfully tackled within Australia. This is largely understandable, but it ignores some of the critical issues that are important in driving longer-running house price changes. Most important are supply and demand. The latest building approvals data suggests that the number of dwellings in Australia will increase by around 150,000 in 2021. This is good news for the building industry, but there is a real risk that many of these dwellings will remain empty given the population growth is so weak. With immigration stalled, there will be demand for just 25 to 30,000 additional dwellings. Well, there you go. Unless the international borders reopen and immigration inflows recover strongly, there will be a significant oversupply of residential properties through 2021. Well, then they will. They'll find a way, they'll change the rules, they'll forget about the Australian stranded overseas, they'll just open up and bring people over. What do you think? Am I just being too cynical now, guys? Or does it really feel like our leaders will put economic stability ahead of the potential improvement in the quality of life of future generations? They will put economic stability now ahead, or consider that more important than potentially burdening generations of Australians with mountains of debt. Seems rather selfish, doesn't it? So, this is clearly a medium-term structural downside risk to prices. All up, the current mini-boom in prices and the relief COVID has been contained will move out of the housing buying mindset soon. The house price pickup looks like it will peter out in the next few months, and I'm hearing rumors that March is a time to watch. Remember, trading while insolvent just ended, beginning of the year. You've got JobKeeper disappearing in March. You've got mortgage holidays ending in March. Sure, CBA won't start foreclosing until September, but the other three banks haven't said anything like that, have they? Correct me in the comments if they have. I haven't seen it. So what do you think? You think we're seeing a boom here? But then there's the other thing. There's the infinite QE contest of the central banks. Are you smarter to lock your money that's continually losing value into property? While interest rates will remain low for some time and credit easily accessible, if there are too many properties on the markets in the months ahead, relative to demand, prices will ease. It seems most likely that house prices will rise by 2 or 3% in 2021, with some cities and regions doing better than others, as has always been the case. But to expect strong double-digit house price gains requires either an unexpected lift in population growth or a rapid slump in new construction, which will limit the increase in new supply. Neither of these looks likely. Well, we're not having more kids because everyone's, afraid that they cost too much, or that they don't have stability in their life because they don't have a house, or there's some stupid hippies that think it actually makes a difference to the environment. So there we have it, everyone. And, construction, well, how much money are they chucking at housing? Do we really need home builder with so many approvals coming online? So there we have it, everyone. Kukulis is suggesting, well, this boom doesn't seem like it will last, or at least he's highlighting some downside risks. What do you think? As always, thank you for watching. Please like, share, subscribe to the channel. Let me know your thoughts and opinions in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. You can also join MeetRx or SelfWealth and help us out those ways. Take care. I'll see you next time. Bye for now.